In this episode of Investors and Operators, I am chatting with Michael Kornman, a legend in the independent sponsor community. I think that might be accurate, Michael. I'll say
I don't think so. I don't think so. It's a bit grand.
You and your brother did over 5 deals over 10 years in the independent sponsor community, and you recently co-founded Align Collaborate, where, if I remember correctly, you're doing equity only for independent sponsors. Closed a couple deals, and there's so much to cover here. But I would love to hear, why did you make the switch from independent sponsor to doing basically a fund to fund for independent?
Yeah, it's it's a great question. We get it a lot. We really enjoyed our time as an independent sponsor. When we started as an independent sponsor, I don't think that term was yet coined. We were a fundless sponsor, which was, kind of not that flattering. Grant and I had built a number of businesses, and we were looking to add a business to our platform, and went out and started calling investment bankers, trying to find a company to buy, and somebody called us a fundless sponsor. We've never heard that term, and it wasn't flattering at all.
Didn't know whether or not to be intrigued or insulted.
Yeah, I was like, no, we have money. Like, what are you talking about? Like, we can put together a deal. And anyway, so we did that for about a decade, and acquired five platforms. And it was a great experience. When we started, the independent sponsor space was much more nascent than it is today. It was a kind of a ragtag group of financial entrepreneurs, and there's a Gen 1 independent sponsor that's been doing it for, I guess, since the 90s. And then there was this next wave, which we were a part of, and it was a really nascent and kind of underdeveloped market. And the independent sponsor was a kind of a financial entrepreneur that was operating without a fund, and certainly did not have as much credibility with sellers of businesses as independent sponsors have today. Well, fast forward today, and Grant and I observed that the independent sponsor market has changed dramatically, and that there are investors that are highly sophisticated, institutional grade investors that are spinning out of funds, and also spinning out of operational roles or consulting, that have incredible angles and perspectives on investing. And so but the capital markets hadn't evolved to meet these folks' demand. Like, it was the same capital providers were operating in the same way as they were 10 years ago. And so we wanted to create a purpose-built fund to invest equity with independent sponsors in a way that was super partnership oriented, understood the role. We want to be supportive. We want to be helpful. We don't want to get in the way. It's really a team sort of environment and role. We're not the lead sponsor here, and we also wanted to provide resources when appropriate. And so we created this. We have a suite of we have a talent partner here. We have a chief technology advisor, but we don't push that on anybody. If they want to use it, they can. If they have their own resources and value creation playbook, that's great too. So we wanted to create something that was just purpose built for this, and really didn't have kind of the role conflict and the economic conflict that a lot of other equity capital sources had in this marketplace that weren't purpose built for independent sponsors.
Yeah. Can you talk about why equity only? Because there are a lot of providers who want to be that one-stop shop of debt and the equity. Don't go anywhere else. Let's make life easy. But what was the rationale for just the equity side?
Yeah, so we believe that was the opportunity in the marketplace. So we did a number of deals as independent sponsors with mezzanine debt firms, junior capital providers, and they can be fantastic. And I have tons of friends at those firms, and I think they're fantastic investors. But it's not always the perfect fit for an independent sponsor or someone doing deal by deal investing, because one, you could have a growth profile of a business that's just not you can't use the leverage levels that folks in the debt world like. And then two, when you're doing buy and build strategy, sometimes you need more equity, and you need somebody that thinks like a true equity investor. So there's just our heritage is buy and build. And so we think we're especially well suited to being great partners for folks that want to execute a significant buy and build strategy as an independent sponsor.
The independent sponsor market has grown pretty significantly. How many independent sponsors do you think are out there who are either actively pursuing their first deal, all the way to those who are more seasoned independent sponsors?
Yeah, that's a great question. So I'd say we think there's somewhere between 800 and 1,200 firms out there, and that's everybody from like one person to a multi-person firm that looks like a traditional firm. I'd say about a third of those are pre-deal two is probably the right way to segment it. So there's probably a third to a half, I'll even go to a half, that are deal 0 to deal 2. And then the other half are beyond deal 2. So it's a giant market. It's having been in the market for a long time as an independent sponsor, we thought we knew a lot of folks, but we meet people we don't know every day. Yeah. It's exciting to meet all the independent sponsors out there.
You have been exposed to tons of independent sponsors. You and your brother have bought 5 companies, so you've seen cycles. I'm curious to know, what advice do you have for people who are new to the independent sponsor game going into a potentially soft economy? What are the things that you wish you would have known to prepare for a recession?
Yeah, so I mean, we got started in 2013, and it was, things were definitely on the rise. I just think you have to be sensitive to kind of, things that have extreme cycle risk just are difficult businesses to invest in right now. There are a lot of businesses that that look like they could experience some softness, but frankly, independent sponsors buy businesses at lower valuations. So sometimes you're getting paid for taking that risk. That's the beauty of this model, is independent sponsors create value by buying things less expensively. They create value by hanging around the hoop, untangling complex situations. They create value by building relationships where someone wants to sell their business to a specific person, a specific independent sponsor. And so, to me, it's about making sure that the valuation is appropriate, considering whatever risks are out there, and avoiding, highly cyclical industries. No one knows what the next 5 years is going to look like. So you have to be an optimist here to operate successfully. It's
an interesting balance between optimism and pessimism, because you have to be an optimist to start a business, to be an entrepreneur, to see, hey, there have been a lot of challenges, and here's how I can untangle them, as you said, and where I can see that's growing. But you also have to be a pessimist and almost like overly realistic about, what does this look like in a down scenario? It's a cyclical business. Cool. Funded private equity might not look at this. I could look at it, but I really, really need to understand those cycles and the risk of those cycles.
Yeah, I agree. I mean, look, there is a risk underwriting component to what we do, and it's very important. You also have to look at growth, and are there going to be opportunities for M&A? Are there going to be opportunities for organic growth where you can pick up customers that others lose due to better execution or disruption in a market? Yeah. There's various ways to win, and it's just really about making sure that you're being critical, and that the valuation is, whatever risks are out there, reflected in a good deal.
So there are a lot of people who are curious about independent sponsors. How do independent sponsors make money? Can you walk us through a hypothetical example of a company that might have 2 million of EBITDA? How does the money work?
Yeah. So there's three components to how independent sponsors make money. There's a diligence fee or upfront fee that independent sponsors earn. It's generally 2% of EV of enterprise value, and it's great if an independent sponsor rolls that in to the deal. We have a flexible view of that. There's various reasons why that does and doesn't happen, but we do want the independent sponsor to have skin in the game.
That's to pay them. That 2% is to pay them to find the business. They're doing the diligence. They might have industry expertise, and then that 2% of we'll call it 10 million of EV or 20 million of EV. How often do they take some of the cash out and roll some of it in? Because they might have been searching for a business for a year, and their spouse is like, "Hey, you need to pay bills."
Yeah, it depends on the kind of the sophistication level or the newness of or experience level of the independent sponsor.
Yeah.
If an independent sponsor's done a few deals, they really need to roll that in. But if it's a first-time independent sponsor that has been living on their savings for a while, like that, we see that. There's some flexible approach to that.
Yeah.
There's a management fee, and generally that or monitoring fee, and that's generally the greater of $250,000 or 5% of EBITDA, and there's a cap generally associated with that, but there's flexibility. I mean, all our structures are bespoke, and they're all the beauty of what we do is we have a flexible approach.
Sorry, 250,000, the greater of 250,000 or 5% of EBITDA.
That's right.
And a cap of how much?
Well, it just depends. Like it depends on the deal. I couldn't even specify it here because it just wouldn't be accurate. It's dependent on all sorts of things.
And is that quarterly management fee?
Yeah, that's right.
Okay.
That's right. It's a quarter, and we want you to pay your bills, build a team. Independent sponsors that have multiple portfolio companies have multiple management fees, and independent sponsors generally there's more than one person in the firm, and there's some folks that are some junior folks as well. So those management fees are just covering overhead, keeping the lights on.
Let's come back to that, because I really want to talk about the growth of independent sponsors and that trade-off of like, when are you a one-man band versus bringing on a VP or an analyst, and how you grow the team. Let's come back to that. That's super.
Sure.
But let's talk about that third component of how they make money.
Yeah, the carried interest, which is what everybody's doing this for, right? That's the big win, and that is it's very bespoke. It's very dependent on valuation. It's very dependent on size of deal. It's very dependent on kind of value creation plan. It's very difficult to say what that would be, but there is a market for that for sure. And one of the things about Align Collaborate is we understand that market deeply, because that's how we fed our children for years.
Yeah.
And we understand the spectrum of economics. Also, our LPs are invested in our fund because they want to invest in independent sponsors. So there's no economic conflict. Many times, capital partners in this sector are not as transparent with their LPs about their investment in the independent sponsor subsector. And so they're sensitive to the economics that an independent sponsor earns in a transaction. We are.
Do you think that, to double click on that point, do you think that it's basically outsourcing BD, or just another BD channel, and then they're like, all right, I'm going to do a smaller deal of 2 million, and when it gets to 5, then we can buy that? And it's basically outsourcing the investment, the BD, and it's almost like the farm league until it comes a size that we're able to acquire, and they're not transparent about that.
So the best independent sponsor capital partners do not view it that way. And there's many that view the independent sponsor as a great partner. They don't marginalize the independent sponsor, but there
Yeah.
are firms out there that do view it that way as well. And
Yeah.
and they become more and more transparent about it. You know, they're just, you know, it's important. When I was an independent sponsor, there's different types of capital partners for different deals. And it's very important to figure out what type of capital partner is appropriate for the you know, buy and build strategy, or the industry, or the you know, just the value add. And when you look at, there are firms out there that do look at independent sponsors as deal finders, but you know,
But do you think it's because of, and I've seen a number of firms now, which I've known to be industry specialists, and now they're going into being independent. They have a whole independent sponsor strategy, and it's interesting because I think that it's such an attractive asset. Almost, it's an asset class. Investing in independent sponsors, super unique, or maybe I'm mischaracterizing that, but you know, I think that the institutionalized strategy where funded private equity firms as a new strategy are going to invest exclusively in, or not exclusively, they're funded private equity firms who might be a sector specialist are creating a new strategy, almost like going from equity and having a credit strategy. Now they have an independent sponsor strategy. And I think that's kind of speaking to the opportunity and the growth in the institutionalization of independent sponsors. But like, can you talk about this trade-off of why should they work with you being purely focused and equity focused versus a funded private equity firm that might be a sector specialist unrelated to their deal?
Well, yeah, it's we've walked in their shoes. Like you know, that's the beauty of kind of us at Align Collaborate, is we understand kind of the hot topics and key issues for independent sponsors. First of all, partnership is primary, and life's, you know, life's a long journey. You want to be treated with respect, and you want to have partners that understand your value. And frankly, a lot of the firms that are coming into the market, you know, they have a different view of kind of the independent sponsor. Their orientation as the independent sponsor is not the lead on the deal. They are a second-class citizen. Our view is the independent sponsor is primary. Like that is our religion. Our religion is independent sponsor. So also, when you think about why people work with us, is you know, there's just this, it's a different look and feel than a lot of other folks that are providing capital to independent sponsors. We just have we can be helpful when asked. We can stay out of your way when asked. We have this suite of value creation resources. We understand the dynamic with sellers and independent sponsors, meaning if we go to one of the things I was always terrified of when I went to a management presentation with a capital partner is how is that capital partner? What's the dynamic going to be? How am I going to, I've spent all this time developing a relationship with a seller. What happens when the capital partner walks in the room? You know, in that situation, we can improve your certainty of close. We can enhance your certainty of close rather than diminish it. And so that's a unique skill set that I think comes from us being an independent sponsor.
Yeah. Let's rewind back to the economics on that third point. Like, how much equity do they get in the business? And in using a hypothetical example.
Yeah, so it's a percentage of profits to carried interest. So basically, there's generally a preferred return to an investor, and then they get a percentage of the profits over that preferred return. And there's generally structure to that. So you know, a basic example would be 20% of profits. I mean, that's sometimes the case, not always the case, but you can get you know, 20% of the profits over an 8% preferred return to the investor, and you can make a lot of money doing that. So that you know, in order to do that, you can pay down debt, you can grow the business through organic measures, you can grow the business through M&A. Those are the ways that you get into that kind of carried interest, and you really build wealth as an independent sponsor.
I know the outcomes might range pretty widely, but like, let's say I'm an independent sponsor, I find a business, 2 million of EBITDA, grows well. When do I sell it? 3, 4, 5 years later? And just the range of why people do this monetarily, because they might say, well, I think it's interesting. I've heard of private equity. I'm going to buy a business. What does it actually mean 5 years from now? And is it worth the opportunity cost of just keeping a great job where I'm an executive and doing well and I really understand my industry? Why do people need to do this financially? Are we talking 5, 10 million plus of outcome, or just keep your job, make 500?
So I believe the best independent sponsors are folks that really have a unique angle on a business. And frankly, if the opportunity is not extremely clear, you probably shouldn't be an independent sponsor. Like, when I don't see many people that leave their job and go be an independent sponsor. I see people that have had kind of an event where they maybe there's been a transaction in their past, or they're at a certain kind of milestone in their career, like they've been a consultant for 20 years, or they've been an operating executive in an industry, and the business got sold. Those are the kind of folks that I see as successful independent sponsors. And remember, independent sponsors, in my view, are generally different than kind of the search fund folks and the entrepreneur through acquisition folks who are going out to buying a business and running it. Those folks are great, and I have tons of friends in that world, but it's very different than what we're doing, which is we need a true sponsor of a transaction that can manage the investment from soup to nuts.
Let's talk about how independent sponsors grow their team, because you've seen so many different independent sponsors. You've done this journey. When you do your first deal, it's probably that one individual. You do the second deal, probably maybe in that one individual. But can you talk about how successful independent sponsors scale the team, how many deals, the team that they hire, senior, junior, mid-level, et cetera?
Yeah, so that's a really great question. And frankly, the crux of kind of being an independent sponsor is how do you scale your team, considering the kind of the economic construct and the management fees on a deal by deal basis. So it's very important to have time leverage and have support. And so if there are two partners, that bring in that third person that may be a junior person is probably less important to do early. But if you're on your own, it's very important to bring in folks as early as possible. And we've seen an enormous amount of success in hiring folks that are coming out of consulting or transaction advisory rather than investment banking. The folks that we see successful in independent sponsor firms that are junior have incredibly good technical skills, have some operating experience, and are really understand the long-term vision. And for some reason, the junior folks coming out of investment banking, you don't see as many of them in independent sponsor firms until the independent sponsor firm gets frankly quite large and substantial.
That is interesting. That is really interesting. So do you think that, let's say I am an independent sponsor and I'm closing on my second deal, that my first hire should be someone out of, a couple years out of, MBB firm, or someone who's done a year or two in transaction advisory at, PwC, Kohn-Resnick, et cetera?
Man, I'll tell you that I think the transaction advisory folks are great fits. I think folks that have consulting experience are great fits. We personally had a lot of success with those folks.
I would not have guessed that you would have gone down that path, but it makes a lot of sense. And Yeah, especially because like on the consulting side, if they've been on some CDD projects and DDD projects, they understand it. They might not have the deep modeling experience, but they understand it enough to get it done. And their commercial sense on seeing the broader business and how to make it grow and
Right.
value creation, not just doing a financial model and putting together pitch decks.
I mean, that's really what we're in the business of value creation. You know, independent sponsors should be in the business of value creation. I mean, it's, you know, when you do a deal, getting the deal across the goal line is important, obviously, but it's the starting line. And so, you know, there's a 4 to 6 year period beyond that where you're going to be living with this business every day and working with the management team, growing the business, solving problems, and you know, value creation is paramount.
Well, that just gave me an idea for a business line that we should start. So we actually just started a project where we're hiring 6 consulting associates for a private equity firm. And now I'm thinking of going towards independent sponsors who have the money and see the opportunity with consultants, junior consultants, and junior transaction advisory services. Thank you for the business idea.
Yeah, no, it's also a great way for the junior folks to kind of get on the buy side. So like
that is awesome. What are in the 5 deals that you've done and all the exposure you've had to other independent sponsors, how would you distill the 80-20 of the mistakes that are made in independent sponsors?
You know, that's an interesting question. I think you have to have a lot of persistence being an independent sponsor, and you also need to know when to cut bait. So there's, you know, it's important to concentrate on an opportunity that you think is fantastic. These are long cycles. You know, it takes you a long time to get a deal closed because of, you know, the fact of untangling complex situations or building a relationship with a seller. And so you have to figure out how to parallel process opportunities so that you know, if one doesn't come to fruition, you have others in the hopper. And so, you know, Grant and I always had a lot of conversations around where do we spend our time, and how much time do we dedicate to one opportunity versus out, and frankly, it's a business where irrational persistence pays off. So, that's the truth of it is being irrationally persistent is the way to be successful in this business as an independent sponsor.
Can you say that again? Because I might want that as the hook to the podcast. Be like, just a nice clean take on that one. And like, yeah. irrational persistence pays off as an independent sponsor.
Irrational persistence pays off as an independent sponsor. It is critically important. And Grant and I spent a lot of time discussing and spending time, how much time to spend on an opportunity.
And I think it's such a valuable balance and a delicate balance of when do you go hard on a deal versus, hey, I have some more deals in the pipeline, because there are so many reasons why a deal dies, rational and irrational. And it sounds like people can just get blinders.
You have to have that. On one hand, these what I'm about to say is going to conflict, but on one hand, you have to have this irrational persistence. On the other hand, you need to know when to cut bait, so to speak. And so I think that it's really a balance.
Love it. Is there anything else that you'd want to leave the audience with?
I'm a big fan of the independent sponsor model. It's how we operated for a decade, and I think it's a great way to create wealth, build value in the lower middle market. I think it's the most exciting space to be in, and we're excited to be part of this community and look forward to supporting these incredible investors.
If you had one word to describe life as an independent sponsor, what would that be?
Exciting.
There we go. All right. Well, it's been awesome to have you on here. looking forward to hopefully a part two after get some more deals closed and have this thing grow. And it is super exciting just to see what you've built. And I think it's a unique model in equity only for independent sponsors.
Well, thank you for having me. Always good to see you, Bud. And, I really appreciate the conversation, the time.